U.S. stocks moved lower on Friday as investors grappled with ongoing tariff uncertainty and digested key inflation data. The Dow Jones Industrial Average traded 222 points lower, or 0.5%. The S&P 500 dipped 0.4%, and the Nasdaq Composite shed 0.5%. The core personal consumption expenditures price index came out hotter than expected, rising 2.8% in February and reflecting a 0.4% increase for the month, increasing concerns about persistent inflation. Economists surveyed by Dow Jones had been looking for respective numbers of 2.7% and 0.3%. Consumer spending also accelerated 0.4% for the month, below the 0.5% forecast, according to fresh data from the Bureau of Economic Analysis. The latest PCE report presented mixed results, with headline figures aligning with expectations, while core numbers reveal a slight but notable increase, said Dan Silic, a portfolio manager at Janus Henderson. Such resilience in core inflation, persistently above the Federal Reserve's target, suggests expectations for a shift in monetary policy may need to be recalibrated, potentially affecting the timing of interest rate adjustments. Hello everyone, welcome back to our channel. One of the stocks we had mentioned before in this channel is Concentrix Corp. Yesterday, it had rallied over 30% after earnings better than Wall Street's expectations. Today's video, we are going to talk about a stock that have a high upside potential in the upcoming years, related to EV growth through lithium batteries, which is trading at a 55% discount. If you find any value in this, can you please click the like button? It literally costs nothing, but it helps the channel out so much. And for anyone new, make sure to subscribe so you don't miss out on any new content like this. We are not financial advisors, so you should always do your own due diligence before making your own investment. The stock that we want to share with you is Lithium Americas, trading under the ticker LAC. It is a pure-play lithium producer. The firm owns 62% of one resource, Thacker Pass, which is located in northwest Nevada, with automaker General Motors owning the remaining 38%. Thacker Pass recently began construction and is expected to begin production in the mid to late 2020s. Thacker Pass is one of the largest known lithium resources in the world. The project would be the first clay-based asset to enter production, and we estimate it will be in the bottom half of the global cost curve. Management plans to develop Thacker Pass into a fully integrated lithium production site with downstream refining capabilities on site, and will sell into the lithium chemical market. With no revenue, Lithium Americas is looking to secure funding to build the Thacker Pass project with additional cash required for operating expenses. As of December 31, 2024, the company had nearly $600 million in cash and no debt on its balance sheet. Thacker Pass began construction last year. As construction progresses, the firm will need financing, which is likely to come from debt. We estimate that Stage 1 of Thacker Pass will require roughly $2.9 billion in capital expenditures. To fund the majority of this expense, Lithium Americas has received a $1.97 billion loan from the U.S. Department of Energy's Alternative Technology Vehicle Manufacturing Program. The ATVM program offers low-cost financing to companies in the U.S. EV supply chain. In addition to the U.S. DOE loan, Lithium Americas agreed to sell an equity stake in the Thacker Pass project to General Motors. GM will invest in a project-level equity issuance where GM will own 32% of the Thacker Pass project in exchange for $430 million. GM will also issue a $195 million credit facility that will satisfy the credit facility DOE loan requirement. GM currently owns a little less than 7% of Lithium Americas shares from a private equity issuance in 2023. The company also issued equity in April that raised $263 million. This should allow it to fully fund Thacker Pass Phase 1 capital expenditures and likely cover operating expenses through at least 2026. Additionally, Lithium Americas issued $195 million of convertible debt to Orion Resource Partners. Orion will also pay an additional $25 million in a royalty agreement. Following this deal, the first phase of Thacker Pass should be fully funded with Lithium Americas, also having enough cash to cover overhead expenses over the next several years. GM also agreed to an offtake agreement to secure the volumes from the first phase of production, and an option for the second phase in a deal that will sell lithium to GM at market prices. Business strategy. Lithium Americas aims to become a pure-play lithium producer. The company was created as a result of the former Lithium Americas separation, which split the firm's North America business, which is the current Lithium Americas, from its Argentina business, which was named Lithium Argentina. Lithium Americas' only resource is the Thacker Pass lithium project in the U.S. state of Nevada, which is currently in construction, with plans to enter production later in the decade. The company will own 62% of the project, with automaker General Motors owning the remaining 38%. Upon entering production, Thacker Pass would become the first clay-based lithium resource in the world. Historically, lithium is extracted from either brine extraction or traditional hard rock mining. Although new, Thacker Pass's clay-based operation will more closely replicate that of hard rock mining. Alternatively, brine, which is prevalent in South America, is pumped from an underground aquifer above ground into evaporation ponds, which over time is concentrated into a lithium-rich salt. This salt is then processed into a lithium chemical at a downstream conversion plant. Thacker Pass plans to be a large-scale lithium production site. Management targets 160,000 metric tons of annual capacity to be built in 4 phases. Each phase will add 40,000 metric tons of annual capacity. As electric vehicle adoption increases, we expect double-digit annual growth for lithium demand. Lithium Americas should benefit as there should be more than enough demand for the company's 3 resources to enter production and expand capacity over time. Aside from the Thacker Pass project, Lithium Americas owns small equity stakes in Green Technology Metals, a company developing 2 spodumene projects in Canada, and Ascend Elements, a company developing battery recycling technology. Our price target for the stock is $6. Our valuation assumes a roughly 11% weighted average cost of capital that includes a 1% equity risk premium, which accounts for the additional risk of Thacker Pass currently being in development. We value free cash flows generated beyond our 10-year explicit forecast horizon at a multiple of 11 times mid-cycle EBITDA. Our valuation also includes that the U.S. Department of Energy's ATVM loan closes and funds $1.97 billion of Phase 1 capital expenditures. We forecast Thacker Pass enters production in late 2027 with an initial 40,000 metric tons of capacity. We assume the Phase 1 capital expenditures are $2.93 billion, in line with management's estimate, and includes contingency spending. We forecast Thacker Pass ramping to a total 160,000 metric tons of capacity over the long term, in line with management's guidance over 4 stages. After Phase 1, we assume additional capital expenditures at Thacker Pass are funded by equity ownership, with Lithium Americas contributing 62% and GM contributing 38%. Longer term, we expect lithium prices will remain volatile, but average selling at roughly the marginal cost of production, which we estimate to be $20,000 per metric ton. Our price forecast is based on our forecast for the marginal cost of lithium production on an all-in sustaining cost basis. We expect lithium demand to grow at nearly a 20% annual rate from 1.2 million metric tons in 2024 to 3.2 million metric tons by 2030. By 2030, roughly 95% of lithium demand will come from batteries that require high-quality lithium with few impurities. To meet demand, higher-cost supply will need to come online from lower-quality resources that will require higher processing costs. Given the wide range of potential lithium prices, we see a range of outcomes for Lithium Americas. In a downside scenario, we forecast lithium prices to average $12,000 per metric ton for the remainder of the decade, which is below our estimate for the current marginal cost of production on an all-in sustaining cost basis, as we assume a wave of new low-cost supply alters the cost curve and keeps prices lower. We also assume Lithium Americas does not expand Thacker Pass beyond the first 2 phases, ending with 80,000 metric tons of total annual capacity. In this scenario, our fair value estimate would be $1. We view Lithium Americas' balance sheet as sound. The company currently has a net cash position. The company plans to use debt and equity to finance construction at its Thacker Pass project. The debt, which will account for the majority of funds raised, will come from the U.S. Department of Energy's ATVM loan, which will last 24 years. Additionally, the GM and Orion deals should cover all Lithium Americas' required project funding and corporate expenses over the next several years until Thacker Pass enters production. We see management's investments as fair with a neutral execution rating. Thacker Pass is currently in construction. While we credit management with advancing the project to construction from development, it is too early to determine management's ability to execute the project. Construction brings major risks of cost overruns or delays, and production risk remains even after construction is completed. Similarly, it is still too early to judge the efficacy of its capital investment in the project. If the project successfully ramps up volumes and is able to achieve unit operating costs that are consistent with its development studies, we are in favor of management's plan to invest in additional production capacity. Finally, we think the firm's distribution strategy is appropriate. As Lithium Americas has no revenue, we think it is appropriate to invest in the construction of Thacker Pass. The firm currently does not pay a dividend or buy back shares, and we would not expect this to change at least until the first two phases of Thacker Pass are in production and the firm is generating positive free cash flow. Further, as Thacker Pass sits on one of the largest rock-based lithium reserves in the world, we would prefer management invest in new capacity rather than returning excess cash to shareholders based on our current outlook for lithium demand, prices, and Thacker Pass unit production costs. Lithium prices will be the biggest catalyst for shares moving forward. While we see prices remaining near cyclically low levels for most of 2025, we see a modest price increase by the end of the year, with a larger rise in prices in 2026. We forecast higher prices as lithium demand grows faster than supply. This will move the market from oversupplied to balanced, sending prices closer to our estimate for the marginal cost of production of $20,000 per metric ton on an all-in sustaining cost basis. What are your thoughts on the stock? Would you buy it now or wait until after April 2nd? Please click the like button if you find any value in this video, and subscribe if you are new here. Thank you for watching. See you in the next video.